Do you agree with Brian that, kind of watch out below if we don't get this deal tomorrow?
Yes, watch out below is going to be very interesting. So the question is, what kind of deal can they do? They were talking about having an extension for 3 months to maybe as much as 6 months. That's not in the cards any longer. And now at best, I think they'll have a 1-month extension. And we'll see how they accommodate the desire of two countries, Abu Dhabi and OPEC, and Kazakhstan and non-OPEC, on their desire to put more oil back in the market, and how they deal with the little bit of cheating that's been going on in between. So I'd say the chances on my mind are overwhelming that they're going to have a deal. They can't afford not to. They don't want to look at $30 oil again. So I think at the end of the day, They will have a deal of some sort, but probably a very short extension.
I also have read about how eager a lot of the U.S. players are to get back to drilling. And I think we ceded our position as the world's biggest producer this year, although we're probably still sifting through things. Ed, how are we coming out of this? I mean, where does it leave the U.S. position relative to OPEC and in that back and forth over how much to produce?
Yeah, well, if you look at all liquids that are being produced, the U.S. is still dominant. We were at the peak last winter, over a 20 million barrel a day producer of crude oil, natural gas liquids, biofuels, other things that count as liquids. And we're now down to just a mere 18 million a day. That's still a lot bigger than anybody in OPEC. The Saudis are producing less than 10 million a day. So it has affected drilling. Drilling, by the way, has been on the rise the last couple of weeks. We've been adding about 10 horizontal rigs a week to do oil directional drilling. If we keep it up at this pace by sometime around April, at this pace we'll be at a 415 rig utilization rate. That's the number, that's the magic number that allows U.S. to continue on an even keel without seeing declines further setting in. If it goes above that, as I suspect it will, given our price projection, we'll have growth in U.S. production between mid-year and the end of the year next year. And OPEC is looking at that. There's no doubt about the fact that they've lost market share largely because of U.S. production over the last 5 years.
Yeah, and I know you think that we're keeping oil prices roughly where they are right now, WTI at 46, Brent at 48 into the first quarter of next year. Pavel, let me turn to you on sort of the company side. There's lots of talk about whether Exxon can continue to fund its dividend. There's lots of talk about, a lot of the valuations of these plays and whether more consolidation is needed. Where would you have investors be positioned specifically in the energy space right now?
Well, the number one question right now is the macro commodity outlook, and principally I'm actually focused more on demand rather than supply. The OPEC decision on 3-month extension, that's all well and good. The real question is, how much closer to pre-COVID levels will global demand get to over the next 6 to 12 months? If we're still at, let's say 95, 96 million barrels a day of demand by the end of next year, it's not going to matter a whole lot what OPEC does. There's just not going to be a balanced market. That's the simple reality of it. So this is where we get into the current backdrop of lockdowns, and then, of course, the outlook to vaccines for the end of next year. The point about dividends, again, what is the picture of demand going to look like? Without meaningful demand recovery towards the end of next year, there is no way oil prices can set new highs, and therefore dividends will be at risk across the board.
And is that why you haven't underperformed on Exxon? Why are you underperform on Exxon but outperform on Chevron, Pavel?
Yeah, so Exxon individually has a problem with its balance sheet, with its cash flow dynamics, and separate and distinct from the price of oil, which of course is a tide that lifts or lowers all boats. Exxon has a giant chemical business that has been struggling for more than a year, so pre-COVID, and it's very exposed to the natural gas market in Europe, which is fundamentally in a glut even before the European climate law, which, if anybody has not circled this on their calendar, do so right now. December 10th and 11th, the most important climate policy decision of the year coming down the pike, and Exxon is inextricably linked to what that decision is going to be in less than 10 days.
Shepard Smith here. Thanks for watching CNBC on YouTube.